Sebastian, thanks for being with us today. I know that much has been made of this haircut, so I want to look forward. What gets Klarna back to a 10, 20, $30 billion or more valuation? How do we know that buy now, pay later and fintech at large wasn't in a bubble?
Wow. Yeah, I think that's a great question. Look, in my head, it's kind of straightforward in a sense, right? We've had this time period now for a few years where growth has really been heavily premiered by investors. And now they want to see profitability. The benefit we have with Klarna is that Klarna was profitable for its first 14 years of existence. It's only 3 years ago or 4, where we posted 14% EBITDA, right? So we have a $1 billion gross profit business in Europe. And we have used the last few years to establish a massive business in the US with 30 million users, with 30 of the top 100 US retailers and tons of transactions. So now it's all about just turning it back to profitability, which is something, fortunately, we know how to do.
Yeah, Sebastian, as you have noted, Klarna has been profitable for 14 years. That's all of the company's existence. But can you break out the U.S. business where you're expanding aggressively and there's a lot of competition? Are you profitable here?
No, we're not, but it's also something that's very natural. So whenever we launch in a new market, we always have kind of 2 levels of growth. So one is new customer acquisition, another one is returning customers using the service more oftenly, right? And what we know by history is that new customer acquisition is costly, costs a little bit more money, and we see higher losses because it's harder to underwrite new customers. So it's very normal for us. We've always seen the same trend in every market we launched 10 markets that become profitable, UK being the previous one. Where it takes a little bit of time to go through that curve and then we turn it around. So to us, this is a very natural development, and we feel very confident we're going to see the same development in the U.S.
Sebastian, hi, good to see you again. I want to ask about 2 particular things and whether your model is shifting. One, when it comes to risk, you're talking about those new customers. Are you having to recalculate in a shifting economic environment what kinds of a risk those people pose? And then when we were talking at the beginning of the year, you were talking about your relationship with retailers, your ability to drive demand to them, the fact that you're letting them integrate your tech into their apps. How much more demand do you expect to see for that with your retail partners, especially if consumer demand just in aggregate isn't there as much and they have to try to drive it themselves?
Sure. Look, I think on the first question, what's interesting to see is like our business is so different than your typical credit card business. And a credit card business has $3,000 outstanding. They give you a big limit. They try to make you borrow as much money as possible at highest possible interest rate because that's how they make money. Our business is very different, right? Our average outstanding balance is $70. It's only outstanding for less than 2 months. And you pay it off in installments, so there's no way you can kind of delay it and roll it over for a long period of time. And what we've seen over and over again, as you may remember, I took the company through the financial crisis of 2007. I saw that this model is so much better in a tougher economical environment than the traditional credit card model. And that's also why we post, generally speaking, much lower credit losses than credit cards do on average. So it's low tickets, it's a lot of customers, and you borrow them a very short period of time. And we turn around our balance sheet 12 times a year. And if we change our underwriting model, it takes us 2 months for 50% of our balance sheet to be underwritten by the new model. So it's very, very unique in that sense. I think on the other side, what you're talking about, demand, I mean, it's incredible how fast part of that our business is growing. I think there's something unique that banks have not really explored, which is the tremendous amount of data that us as customers have decided to entrust them with, which basically tells you about what they're purchasing, where they're purchasing, what their brand preferences are. And if you build services that allows those consumers to benefit from that data and present brands and offers to them that are interesting to them, it's a tremendous opportunity. It's actually growing with Klarna right now over 200% year on year. And I mentioned we have 30 of the top 100 US retailers. We have more than 50 of the top 100 US retailers using us for marketing services. So we're quite excited about that. I think that as people see like more stock and they want to see more demand, they'll utilize more of these services rather than less.